Microphone on. Good afternoon, everybody, and welcome to today's edition of our live market analysis USA edition number 2. My name is Carl Capelunga. I'm the market analyst over here at ThinkMarkets Australia, and it's a pleasure to be with you as we have a look over stateside and try and find some stocks to add to our portfolios. Maybe you are trading US shares. We'll hopefully underline some of those you might want to get rid of and see if we can find some new ops as well. Pretty simple stuff from here. Throwing the floor over to you, find your Q&A window, get those requests going, of course, specifically related to US equities, and I'll do my best to give you a good technical and fundamental analysis reader. Going to head over here now to the AMI broker chart and request some stocks to talk about from you. Don't have any in the system yet. Obviously, if you're watching me on any of the streaming services, you can get those going. Just going to open up our Refinitiv icon screen as well in the background. If I don't have any requests, I can see plenty of people here. So Shot, David, H, Harry, Michael, Phil. There's got to be some things you want to talk about, so get them rolling in. We may well go and cover some of the majors, and we did have a look at Apple last week, and we said that it had begun to change its long-term trend. You can see through our traffic light system here, the long-term trend, which was down, has gone back into amber, and of course we need it to be there. I'm not sure why my AMI broker is not showing up, actually. That is unusual. Let me try that again. Definitely got, yeah, we can see we have the very weird. Let's try that. There we go. Not sure what happened there, ladies and gentlemen. Apologies for that. Got a request coming in next from David for Tesla. Okay, well, now we can see the long-term trend on Apple is just starting to change. We've gone through that amber system here, and the short-term trend was looking fairly good. We'd see the light green zone. Next thing we want to do is look at the price action, and we said the price action was actually pretty good from those lows. You can see higher peaks and higher troughs coming in through here. Obviously, last time we looked at it, it was just hovering beneath that last little point of supply in here. And the other thing about the price action is we do want to see it have this nice clean price action where the last trough, so if we call this T0, is at or above the second from last peak. So if we call this P1 and therefore this P0, that is typically where we want them to be. We draw this in a slightly different color. You want to see the old point of supply, right? The old point of supply in here acting as a point of demand. And we often see in an uptrend, there are always people selling. We know that to be the case. But in a strong uptrend where the big money is on the buy side, they're looking to buy pullbacks. They're looking to take advantage of that short-term supply. So you've got really just in here, in any good uptrend, you're going to have a little bit of profit taking from time to time as things get a little hot. Often the big money will back off when things get hot. They don't want to exacerbate the gain. They don't want to push the price away from them. They want to try and buy as cheap as possible. They may even tip some supply into the market, if only to create a short-term top, to put some of those longs under pressure and force them to sell out. Of course, it's that selling, that supply that they're waiting for down here because they know that this stock is going much, much higher in the long term. So that demand comes back in on the dip. We've seen it so many times, and then up we go through this, through that old high like it didn't matter. But of course, the profit takers in there, once they see the price has gone higher, they regret that decision of taking profit. They slap the forehead. I knew I shouldn't have got out. And this area now at P1 represents the exact point in price of their mistake. So they are incentivized to get back in as close to the elimination of that mistake as possible. And therefore, that is as close to the price they got out at. And that's why we tend to see that buying come in, that realization that this is going much higher from those shorter term traders coming in around the point where, let's face it, the big money is looking to buy the dip anyway. And you get that accumulation of demand in an environment where there was very little supply as it was. Why? Because the stock was going up. It's in a longer term trend. This is short term price action, of course. And the combination of that demand in a relative supply vacuum causes this higher trough to form at or above that second from last peak. So I know I say it a lot. I don't often explain why I want to see it, but there is certainly a psychology. There is definitely a reasoning behind all of the technical patterns that I show you. It's not just double tops are bad or double bottoms are good. There has to be a logical reason in terms of supply and demand and how the market participants are interacting to really fortify the theory of the pattern. Anyway, back to Apple, what we don't want to see, unfortunately, I know I've said a lot of good stuff about it, but we don't want to see the points of supply building. Then ideally, we don't want to see it break beneath, we're in all caps now, break beneath the point of demand that comes in between that. Where it goes from there is really important. If it's just a total collapse, obviously supply is overwhelmed, demand is given up. If we can see other logical areas of potential demand start to hold, then that's a good sign. So price action is one way of looking at things. And then we've got my dynamic support and resistance zones in here. And we can see that we can see the early signs. It's just a start now that there is a bit of actual demand coming in, because you can see the lower shadows of the last couple of candles. I wouldn't say that the finishes on either of those candles were convincing, not convincing enough for me to say, hey, I think you should run out by Apple. But I think there is some demand in the system here. It does give us some really clear strategies going forward, because if we do break beneath these candle lows here, these shadow lows, that's clearly going to be a very negative sign for Apple. And if you're an Apple shareholder, you'd be looking to trim on the basis of that. So automatically, for me anyway, you wouldn't ask too many questions. You'd go minus 1/3 of your holdings. And if we don't get beneath there, I think it actually sets a great little trampoline point, a little foundation point for a potential move back up to test those old points of supply. So very important to understand what those lows are there, 147.16, let's call it 147. And as long as we stay above that, I think Apple's okay for now. In terms of adding risk, I'm not there yet, as I suggested. I want to see some more confirmation, and that confirmation will come in the right sort of candles. Okay, so I'm interested around this level because I can see the short-term trend supporting. I can see the long-term trend supporting. A long-term trend which in the past has been very good at pushing prices down appears to now be holding prices up. So I'm interested, but I'm not there yet. So what do I need to see? Well, I need to see a candle that looks at least as good as that, I reckon. So a nice big white candle heading up. There we go. Or it could be a candle that has a nice lower shadow as well, but still closing a little, towards its highs. So something like that would be very good, taking us, at least halfway back up this last little dip to say that we've, overwhelmed at least half of the supply that might be in the system there. And then based upon that, and it would be an aggressive entry, mind you, this would be an aggressive entry. I would consider doing something like this. So adding some risk to Apple on the basis that we might actually push higher here through 170 and into 175 to this old MPOS over here. This is going to be MPOS, major point of supply. And that's kind of the target. And then I've got a really neat little trade here, I think, where, your stops are probably going down here somewhere, and your reward to risk is actually looking pretty good, assuming we can blast through those two little POSs. And then don't forget, there's a little one over here as well that probably should be taken into account. So not adding all the risk for all of those reasons. There's still plenty of uncertainty in terms of supply around these levels, but adding some risk, we're then potentially seeing how we interact with this point of supply. And if we can deal with it really well with some white candles or some lower shadows, that's when I'm looking to then put a little bit more skin in the game with another third. And it might be then only, and this is looking way into the future, so something like this, adding a third, and then only once we've actually broken above that point of supply, come back, held, tested it, so in and around this zone here, I'll just draw it for where exactly I'm looking. So something in here, the nice candles in there, that would be the catalyst for that final plus 1/3. So just giving you an idea of how to build a trade. I know it's all hypothetical at this stage because it's contingent on a bunch of things happening, but what a great case study in how to look at price action, how to understand where demand supply is, and then how to add into a trade sequentially to get to a point where you're fully loaded once you've got really great confirmation that the trend is actually turning higher, because the trend is indiscriminate at this point. Pretty interesting sort of stuff for me anyway. I'm pretty sure we did Apple last week on the fundamental valuation, but we've always got new people coming in. Look, I don't think it's ever boring to put to put something as big and important globally as Apple into this platform here. I will head over here, of course. Shopify's coming up for Harry. Obviously, Tesla's up next. Oh, I don't know what happened there. Geez, the technology is not doing me any favors today, ladies and gentlemen. Okay, I do know. There we go. I'm not doing the technology favors because we're no longer on the ASX, are we? If you're an international investor, and I say international because you're not in Australia, these the typical stocks we look at in these sessions, because I'm Australian based, most of my listeners are Aussie stocks, so I need to make that change, but we do have Apple on screen now. And you will note there is a bit of a glitch in the spreadsheet from year ends, because I know the Apple year end is December, but everything works. I have double checked the numbers, and I do note that even though that says September, it is working as the December numbers. Okay, and that is not me. I could not get the Thomson Reuters formulas to represent the right thing here. Okay, so I kind of wash my hands of the blame on that one. But Thomson Reuters, obviously one of the world's biggest financial data aggregators, and they have this product called Refinitiv Icon, which is just an application that you can access this data through. And what they do is collate various broker estimates. So you can see we've got 38 estimates here. Brokers typically giving a price target, a rating, buy, hold, sell, and a commentary for various stocks. So this is typically stuff that really only the clients of those brokers can get, but they supply pretty top line stuff to Refinitiv Icon. They also supply their estimates as well for various financial data, which we can then use to help us get an idea of the valuation of the company. So if we look at anything that's future looking, forward looking, obviously it's what you would call an estimate, and we call them consensus estimates because it's the average, I guess, of each of those 38 ideas. And then we've got the historical data. That's the data in the bag. So 38 estimates for Apple. The highest target for Apple is 282.40, and that compares to let me just make sure I've got US dollars working over here. You can see again the influence of the Australian dollar. There we go. We'll change that back. So you'd be probably thinking, wait a second, those numbers aren't making any sense. Of course, they were Australian dollars. Now they're back to US dollars. So 195 is the high price there on Apple versus the last price of 149.41. The lowest price 118, the average 168.21, which gives us about 12% upside as far as the brokers are concerned. Again, not my target, it's the broker's target. 11 brokers with a strong buy, 23 with a buy. So if you add that together, you got 34 out of 38 brokers, although somehow we've got more than 38 in here. But anyway, that's again, blame Thomson Reuters. 7 holds, 1 sell. But we can see the vast majority of brokers calling Apple a buy. I'd like to look then, after I've looked at what the brokers are thinking, and again, I don't want to mess too much with what they're thinking, to be honest, and their forecast estimates. I mean, I can sit down and break down Apple region by region, product by product. You just think about that. Probably agree. I don't want to put words in your mouth, but you probably agree just how ridiculously, a ridiculous waste of time that would be for one individual to think that they can analyze Apple completely and then come to an idea of Apple's valuation. I think that is absurd. You need teams of analysts just working on Apple to understand Apple. And that's what we're looking at here. We're not looking at any one person's view. We're looking at the aggregated view of people who should know what they're doing. So again, I'm not going to try and break down Apple. I'm quite happy just to use these numbers and then work out, based upon my view of the world and what I'm prepared to pay for it, whether it's good value. That's how I do fundamental analysis. And of course, for me, the final decision always comes from my charts. I want to see earnings growth. Look, as an investor, I want to see earnings growth. If earnings are flat or declining, then I need to get a super amazing bargain on the valuation. So I need to be paying a very, very low PE, price to earnings, for that company. Okay. But if the earnings are growing, I don't mind paying more for it, because investors want growth. Stocks that are bottom left, top right on the chart are the stocks with earnings growth. So EPS line, obviously, you can see how it has been steadily building. A little bit of a slowdown, relatively speaking, through here. I mean, 71%, 9%, and then we've got minus 2% into DEC 22. Looking forward, we've got some growth coming back into the business, and pretty good there, 10, 7, 6 to give them a compound annual growth rate over the forward-looking period of about 8%. Now, typically, markets tend to grow their earnings by around about 7 or 8% anyway. Look, bad years, it'll be worse than that. Good years, it'll be better than that. That's probably not far off broker estimates. I mean, I've seen some going up to 12 or 13% for the S&P 500 for next year. But, you know, given the current global economic environment, look, I think eight's great, to be honest. Then we come down and we start to work out, well, what are the brokers in terms of their median valuations? What are they saying that they're prepared to pay for Apple? And this dynamic F here, which is this cell here, is dynamic future looking. So we're saying looking at the median forecast PE. So we're seeing what are the brokers prepared to pay for Apple in the future, coming in at 21.9. And then I like to see, well, how does that compare with the past? Am I getting, is that number high or low relative to the last 5 years? And it's very low. In fact, it's actually below the bottom of that 5-year range. So what we're looking at here is quite a high hurdle rate, really, for Apple, and brokers have paid much more than that in the past. Brokers, investors. So I can go for the historical, and you see historically, if we look backwards, the median is more like 45.6. In fact, it is exactly that number there, because that'll be the median of those numbers. Okay, and if we use a PE of 45.6, then Apple becomes crazy cheap because we're making the hurdle rate lower. Okay, a higher PE is a lower valuation hurdle rate, because we want a lower PE, don't we? So I don't think we can do that, because it's just not what the brokers are doing into the future. Growth stocks, typically, historically, their P's will be very high, and their P's in the future will be lower as their growth slows down. Apple's rate of growth, you can see in the past, was much higher than 8%. So I think 21 sounds a little bit high, to be honest, for a stock that's only growing its earnings at 8%, but I don't see any reason to disagree strongly with the brokers. So I'm not going to change that. I'm certainly not going to increase it, because I don't think 8% warrants increasing it. But I don't think I need to lower it either. So look, for me, I think Apple is roughly, give or take, fair valued at this point in time. I'm happy to concede that the brokers may well be right with a better valuation, but this last bit is more about how I feel about stocks and less about how the market feels about stocks. So I don't see any reason here to say that Apple is grossly overvalued, and I'm happy to defer to the brokers' quote-unquote wisdom to say that it isn't overvalued either. Okay, and if the chart, therefore, we'll head back here now to sort of put all of this together. If the chart, therefore, is supportive of a move up by 12 to 15%, then who am I to doubt it? Okay, but I think the chart looks fairly solid. Obviously, I've given you some bug out areas where that thesis will change, and I've shown you some scenarios where we could actually add some risk to that one. Okay, nice little starting point for Apple. For all the Aussie investors out there, look, get out there. We've got a huge offering on the ThinkMarkets trading platform of USA shares. So talk to your ThinkMarkets support person there and see if you can't get the right account open to start trading them. Let's head over to Tesla now. TSLA, of course, is the code. Another one we looked at last week. And with all of those red arrows, we might have said, there's a bit of a question mark here. Unlike Apple, let me just head back to Apple for a second, which has moved above its long-term downtrend zone. And we know that that zone is very powerful in pushing prices down when there is a downtrend. But on the way up, once we get above it, we're expecting, somewhat hoping, that it will act as an area of dynamic demand. Okay, and so far for Apple, that appears to be happening. When we go to Tesla, I think the reason why I drew those red arrows last week is that we haven't seen enough evidence that it is actually able to overcome the dynamic resistance we would expect at that long-term downtrend zone. So I don't think I'd need to do a whole lot more analysis on this one today. Certainly, if it can break above the level here, and let me just get my arrows going. So somewhere in there, close above 220. I don't want to just see a tickle above 220. I know a lot of traders will buy breakouts on things. So they'll look at a previous point of supply and let's just say it's $220, and they'll use an on-stop order in the market to buy them in on the break of $220. I used to use that methodology. I don't use it anymore because I used to find that there were there are many, and this is just theory, right? Many funds out there, hedge funds, that would sell into these technical breakouts, and you'd often see big upper shadows coming on the day because they're betting on this wash, this surge of on-stop orders coming in, and that represents buying. And if you're a big fund manager that really wants to sell a stock, the best time to sell is when everybody's buying, and those on-stop orders are providing that for them. So they come in with their big sell orders and create those big long upper shadows on the chart, which of course is a big sell sign, which everybody who's trading the technicals will now have to deal through and exit. So what I want to see is a close. I want to see at the end of the session those hedge funds, fund managers that may have been laying in wait to sell, they're not there. They're quite simply not there. If we're getting a nice white candle, a close on the high above that key level, the supply that was at that level has been dispensed with in the market. Okay. If we get that upper shadow, the supply has been reinforced, if anything. So I prefer to wait for a close. Now there is a bit of a drawback on this system, because if we are in this scenario where we are taking out that supply and the price just keeps going, you could close well above that level and therefore have to pay more to get in. But I don't mind doing that, because if we are closing well above that level, it just means there's more demand in the system and very little supply. And everything I thought was happening is actually happening. I know there's a bit of a trade-off there, but in my experience, I think it's the better way to go. Long story, and hopefully it was a valuable story for you. I'd need to see a close above 220 to get really excited about Tesla. I would start to get really concerned that this area we're in now is dynamic supply, is a point where the fund managers are coming in to sell the rally. If we close beneath that low there, which is 187.61, let's call it 187. So close above 220. Yeah, look, I've got no issue. And again, we want to see a nice white candle when that occurs, in going plus 1/3 on this one, but a close beneath 187. Then I think you are looking to reduce your risk on Tesla, because if we do get beneath here, then really there's not a lot holding it back up until we get back down to these lows around 100. I'm pretty sure I did Tesla last week on this, but again, look, in the interest of, I know it's popular. Let's have another look here. TSLA, 36 broker estimates in terms of the highest price target on this one, about $300. The lowest price target, super bearish there at 24. Far more polarizing than Apple. Apple, we saw a huge skew towards the buy rating here, a fairly even mix. 10 strong buys, I get it. 16 buys, that's still 26, it's still the majority, but 12 holds, 3 sells, and then we've got 2 strong sells. So we've got a couple of brokers out there that have looked over every square inch of Tesla and have come to the conclusion that they hate it. And whether you agree with them or not, there's got to be something in there that I don't like. So that always concerns me a little bit, as somebody who prefers to defer to the consensus. Looking at the earnings line, we can see obviously negative earnings in 2018, maiden profit here in 2019, and then earnings have just grown exponentially from there. A little bit of a pullback in the last calendar year, and then expecting to pick up substantially into the future for a 17% compound annual growth rate over the forward-looking period. Let me just make sure that's right. So that number comes right. Sorry about that. I have to remember to coincide these two. 25%, it's still very, very good. Okay, no complaints there. Would I pay 33.7 times earnings for a company that's growing their earnings at 25%? Absolutely, without even thinking. That is, if it can deliver that, 33.7 is actually very, very cheap in my opinion. Now the question is whether they can deliver that. Okay, and that'll come down to your faith in these 36 brokers, I guess. Looking at the historical PEs, well, 15,000, we're definitely lower than that. And at 33, we're way beneath the 5-year low there. And again, I can't see any reason to mark this higher. I don't think I need to. I don't think I need to market low. I'm happy to go with these guys. I'm happy to go with this and say that I think Tesla's pretty reasonably priced at current levels. Now, looking at this average here, it's probably skewed a bit because that 24.33 is in the average. All right, this is not a median, this is an average. So I don't think you can really look at that as an accurate representation of what the brokers want. I'd love to get a median on this, but I simply can't. But I suspect it's higher than that, and probably a little bit closer to what I think is roughly fair. Okay, so there's nothing so sinister in those numbers to suggest to me that I can't buy Tesla. I can't add some risk to Tesla if it starts to go up. Look, if it starts to go down, who cares? I'm not going to buy it anyway. If you get where I'm going, really, all I'm doing is looking at those fundamentals to make me feel better about going long, I guess, if I did, but I would only do it if the chart agreed. Let's head over to Shopify for Harry. Now, Harry, I'm pretty good with my US codes, but SPF, if you can give me the code on that one. I thought I saw it there for a second. Yeah, always give me the codes, please, on that one. I will, while Harry's getting that to me, I'm going to go to the next one, which is Eli Lilly, LLY. Harry's given me, same Harry, he's giving me the code on that one. Okay, let me get back to my default Zoom and start with, thanks, Harry, shop. Pretty obvious, isn't it? Okay, starting with my default Zoom and then going back to my starting point, which is the trends. What am I seeing in the long term? What are the long-term investors doing? That's the dark green zone. That's my proxy. Long-term investors are the dark green zone. Long-term investors buy the dip. You can see it here, right here. They buy the dip, and that's where they like to do it. Yep, time and time again. They almost did it here. I don't know what that is. Probably earnings or some dirty data. But instead of getting that nice push out of the zone like we've seen in the past, we have actually failed quite miserably since then. I'm a little bit concerned, but it does give us some really clear-cut levels to deal with this one, because I'm going to suggest to you that beneath that low there, it's looking really, really sketchy for Eli Lilly. As in I'd probably be out. I think, this idea of exiting 1/3 at a time, I think you've had plenty of reasons to exit 1/3 prior to this, and this might be with the breaking of that long-term trend. The short-term trend is very clearly defined to the downside, and with the severity of these candles through here, these black candles through here, I think we're in trouble. If I just zoom in now that I've done that wider analysis, I'm allowed to zoom in. Okay, I've seen the bigger trend. Now I can zoom in to get my finer detail. We can't do it the other way around. I don't think you want to get the finer detail, then zoom out and see the trend. Always start with that big trend first, because that'll provide the context for whether you even need to look at the finer detail. Now I'm going to look at the finer detail because Harry's asked me the question. Ordinarily, I'd probably just skip on. I'd be saying, look, I don't need to worry about this because it's not a stock I'm going to buy because the trends aren't right. Okay, but Harry's asked me a question, so I've zoomed in. I don't like these shadows. These look pretty bearish to me. You can see the consistency of the supply in there. We need to get above that area, and if you're not sure what that area is, I'll click on here, and then you can always look over here, high 332. So close above 333, and it's going to start to look more likely that we are okay. We are holding this long-term uptrend zone, and there is some hope for this one, but so much work to do. We need to get above 354 for me to have any confidence that we're going to go back and set a new high. Okay, so plenty of work to be done. If we do break below this low here, which is 317, I'm going to say lights out on this one, and I prefer to be a full exit on Eli Lilly. Okay, just because I don't really have a buy on that one anytime soon. I'm just going to do quite a bit of work to get there. I won't look at the fundamental valuation. Might keep moving over to Harry's next one, which is Shop. Now, clearly long-term downtrend in play. It has gone to amber, so we're trying to decide, the market's trying to decide whether it wants to move back into that trend or change the trend. Up to a few days ago, I reckon you probably would have said very good chance it's changing the trend through here. In fact, in my opinion, it was looking very good there. I'm guessing this was earnings, and again, you always have to be really careful around earnings season, especially in the US, because you can get some massive moves one way or the other. I would say this idea that the trend is turning now is on hold for probably what is going to be a substantial period of time until we see something like this, some price action like this, to get back up to the top of that zone, to pierce the top of that zone and start to do what it was doing before. there's really no reason to be entertaining longs on this one. That'd be my opinion. And I can't see any reason to go short either. I just don't think there's enough potential impetus to the downside. I just think with supply in here, and then, you know, the low there, I just don't think there's enough in it to contemplate shorts. Okay, but I'm not a buyer. I think that option is off the table, and there's plenty of stuff that needs to happen to become a buyer. If you've got it, I'm struggling to see a good reason to hold it just at this time. If anything, if you're unsure, you know, you can always sell some, hold on to some. If it goes back up, at least you've got some. If it keeps going down, at least you sold some, and at least you got some capital out to do some better stuff with your money in the meantime. Look, I wouldn't put myself in that position. I wouldn't be in a position where I'm holding this anyway. Okay, so I don't need to make that call. Let us go back. We've got some stuff coming through from Robert, but I'm not understanding it. Sorry, Robert, try a language that I can understand, please. Let us go to, we might go to the shop fundamentals just to see how that's tracking along. Get your questions in if you have them. Otherwise, we'll adjourn shortly, I think, after this one. So Shopify Inc., having a look at the broker recommendations. Well, more than Tesla, that's interesting. And more than Apple. 81.43 is the high target. 28 is the low. Again, clearly very polarizing. 48.55 is the average, which does allow for some upside from here. 5 holds, 14 buys, 25 holds, 2 sells, 2 strong sells. Extremely polarizing. In terms of the EPS line, we can see wobbly and then explosion and then back to near nothing again. And then we're not seeing, you know, what I want to see with earnings is a steady growth over time. Those are the sleep at night, reliable type stocks. This one clearly is going to be more volatile, and consider that against your sort of your risk profile as well. But for what it's worth, the brokers are expecting straight line growth into the future to the point where it's 167%, assuming I have that right. That is right. Look, you know, I would find that hard to believe given the history of the company, but who am I to disagree? 167%, would I pay 160 times earnings? Look, probably not for something like that, or not certainly without jacking that up at least to moderate, but probably even to high. And even then, me personally, I wouldn't feel comfortable paying such a high price for something. What would I pay? Oh, I don't know. You'd have to. This is personal preference here. Would I go 80? Leave it. That's. I'm really going to top out there. And that would be only because this is so astronomically good that I would go 80. You know, 40 is my typical for a growth stock, but you know, let's face it, growth stocks aren't growing at 167% per annum. So, you know, 40, 80 is beyond the ceiling, if anything. But it does kind of bring it back to about fair value from here. I'm not sure if I agree with those. If I went low risk on this, probably we're getting closer. Even then, not so much. Yeah. So let's give it the benefit of the doubt and just say that it's roughly fairly valued at this point in time based upon what I'd pay, but the brokers are seeing some value in the current price. I might just double back because I don't have, oh, well, Michael's popped one in. We've got a couple there. I might just do LLY or Harry because he's been very generous with his questions today. 24 estimates, 455, high target 270, low average 383.62, which is allowing some upside from the current price. A little bit more decisive here. 7 strong buys, 11 buys, 7 holds, 1 sell. No strong sells. Looking at the earnings line, are we seeing that steady gradual growth? We are until the last year. Of course, this is a year where interest rates have gone from 0 to 5%. So we can forgive this. I know I said, look, you want to see still the earnings growth, but we probably can forgive this. And to be honest, I can forgive a pandemic as well. But this grew earnings through the pandemic, which is actually pretty impressive for me. And then looking forward, again, the brokers extremely bullish on this one to the point we get a 32% compound annual growth rate, which is a ripper. And I could certainly go 40 here. And that could therefore make it very, very cheap according to my valuation metrics. I won't do that because I want to see what the brokers are thinking. This is what the brokers are thinking here. So they're more at 24.3 and they're going to know better. Where is that 24.3? It's certainly beneath the previous 5-year range. So you can see how my 40 actually compares pretty sensibly with that range. And if we go with the brokers there, it's still looking cheap. You know, it's looking cheap here as far as I'm concerned. It's looking cheap here as far as I'm concerned. And I'd happily pay more than 24 times if a company can deliver that. Don't know enough about it to say whether it's low, moderate, or high risk, but I'll show you the different alternatives. I won't show you the alternatives, sorry, because you're screaming at the screen that I haven't changed the bloody thing. Apologies for that. So once again, super quick apologies. 383 is the mean target, allows 17% upside. You can see seven strong buys, 11 buys, 7 holds, 1 sell, no strong sells. You can see how through the pandemic it grew earnings, and here only a slight pullback as interest rates went from 0 up 500 basis points. Huge growth expected going forward, 32%. That is allowing me potentially, I mean, for me, I'm just telling you, I pay 40 times for a company that I'm very confident will deliver it. We'll just switch that back to default. But the brokers are at here, and who am I to disagree with the brokers? They're more at 24.3. That's looking forward. It's certainly very attractive. I can't see any reason to doubt this valuation here from the brokers. In fact, it probably looks a little bit cheaper on my valuation. So that's Eli Lilly. So go back and work those against the charts we talked about. I've got some more here. NVDA, which is NVIDIA, of course. NVDA, which there you go. Looking very, very good indeed. Had a bit of a pullback. This is one I tipped. Maybe, Michael, that's why you bought it, hopefully. I tipped this a few weeks ago on a couple of media organisations, actually. In fact, I put it in my Stockhead article, and I tipped it on the trade on Ausbiz as well. So great to see that performing well, and I can't see any reason why you would sell it based upon that candle. I know straight away things go up, they gap up, and people say, "Oh, I need to sell, I need to take profits." No. You know, it's going up because there is more demand than supply. There's more demand because all of those brokers, all of those research houses, all of those big investors read the report that clearly came out last night and loved it. Okay, they wanted to buy more of it, and they didn't want to sell the shares they already had. Okay, so we've got demand, we don't have supply, prices going up. And for me, that means there's no reason to get out at this point in time. I can't see the supply coming in. In fact, there's a lower shadow, pretty good close there. And we closed above that last point of supply. So hunky-dory here. Can I buy it? I'm not averse to buying it. I might want to wait for a little bit of a pullback first. And I emphasize the little because I don't think you're going to see much of a pullback. I mean, 230 is probably the level now. So on the right candles, lower shadows, white candles in this zone, I could add some to this if you already had it. There's no reason why you can't add some more. It's not a sell for me. I think sell's off the table. 100% I'm a holder, a happy holder, and a buy based upon maybe trying to get a little bit cheaper into that sort of 230 level. And the only reason why I'm saying to get a little bit cheaper is because it's so far away. It's not me being flippant. I have a rule. I like to buy things when they come back to my light green zone. Okay, that's my value zone. That's where I want to buy. So it's just a bit of a distance away from that. And certainly, this may catch up and give me the right candles. I might get another opportunity in the not too distant future. So 100% a hold. Looking to buy it or add to it and sell is off the table for NVIDIA. All right, now I'm curious. Let's head over here, and I will change this time. Sorry about that. Again, but let's go NVIDIA in here. NVDA. And we can see we do have, again, 38 estimates. The mean high price there is 320, low at 110. The average 240 is roughly where it is. 9 strong buys, 20 buys, 12 holds, 1 sell, 1 strong sell. A little bit polarizing, but definitely skewed to the upside. In terms of EPS lines, you know, good. It's that really steady, strong growth that I like to see, and then extrapolating that into the future, you know, I need to change that for whatever reason. It's gone Jan, but it is December, no doubt. EPS 29%, still very, very good. Would I pay 35.5 times earnings for that growth? Absolutely, I would. Yep, no complaints at all. I have no reason to doubt the broker's 35.5. It is well below the 5-year range. and seems pretty reasonable to me. So I'm going to say this looks cheap to me. I think this still looks really good value. I know the broker average is lower than mine, but that's because you can get it's an average, right? So we don't know how much some of these really low ones from these two haters are dragging it down. But I can't see any reason why you would call this expensive. I think the valuation supports the chart at this stage. Let us head back to the charts there, and we've got AMD, which is Advanced Micro Devices. Similar sort of company to NVIDIA. It did pop up last night. It clearly didn't report, but probably got a little bit of love from people who thought maybe if NVIDIA's going up, I might buy this one. It looks okay, doesn't it? I mean, I'd still go for NVIDIA. I know, again, people gravitate towards the cheaper one. They go, well, you know, I missed NVIDIA. I've got to go buy AMD. I say stick with the leader. It keeps leading. If you wanted to add some of this, well, that might be a strategy. I'm not seeing it in the chart just yet. There's some good stuff going on. The long-term downtrend zone, and it's this one here on the way up, on the way down, Amber. You keep hearing me talk about how it impedes upwards price action when we're beneath it. It has done that really well in the past. Is it supporting price now? And there's a big question mark over that. I'm not so sure. It could be. I can't say it isn't, but I can't say it is. And until I can say it is, I'm going to say, look, keep an eye on this one, right? If it starts to do this sort of stuff, that's when I'd look at it. We want to see more lower shadows. We want to see white candles, high peaks and high troughs, all that sort of stuff come in. We want to see this short-term trend, which went back to amber, and that's not great, go back to green. So look, it'd be on the watch list. Keep in mind, even if you do get the right setup, there's going to be a bit of supply probably through that zone, so through here. But if you can make the trade work on reward to risk, because you want to get your stop beneath, hopefully this becomes demand sort of through there. You can probably make at least 1-to-1 on that one. But there's still a great deal that needs to happen. So I've given you, I think, a pretty good idea of what you want to see. Buy, hold, or sell. I can get to a hold because there's enough going on there. It's not the strongest hold, but there's enough going on there. Not a buy. I don't think it's a sell though. I just don't think it's a sell at this point in time. Look, it might become a sell if we break beneath. Really, there's demand in here. And if we get beneath that zone, then we are very much back in this long-term downtrend, and then it would become a sell for me. Let us head over here. I'm curious now because we've got a really great reading for AMD on the valuation tool. NVIDIA on the valuation tool. Let's see what AMD gives us. 35 estimates, 200 on the upward price target. Again, maybe the average skewed to the upside here, isn't it? With that 267 on the downside, the average is 93.6, which is allowing some upside from the current price. You know what? Actually, brokers are really positive about this one. 10 strong buys, 18 buys, 13 holds, no sells, no strong sells. That's impressive. Earnings line. Steady growth, great growth, no complaints, and expected to continue into the future. Let me just make sure that goes back to that. So this number comes out correctly, 22% growth. Noting, however, flat through here though. Flat through here. I can't remember what the NVIDIA one was, but I don't think it was flat through there. So I'm probably not going to pay as much in terms of PE for this one as the last one. And you can see the brokers aren't expecting that much from it either. It's a big difference here. 16.5 is good though. I mean, that's still a very low PE for 22% growth if you can pull it off. And it's well below the 5-year range. And I don't think it's a very high hurdle rate. Look, I've got no reason to doubt this, and my valuation's saying it checks out. So if the AMD chart turns up, there's no red flags here in the valuation to tell me not to buy it. And that's probably the best way, now that I think about it, to explain my methodology, isn't it? The chart is everything to me, but I might go to the fundamental valuation, look for a red flag. Is there something there that just says that really this is completely wrong? I just need to not see that. I just need to not see a red flag. Okay, I don't need to see something's cheap. I don't need to see it be a bargain to buy it on the chart. The chart is the most important. I just need to see, or just need to not see a red flag there. Okay, let's do Intel. How are we going on time? We've got about 15 minutes left. Happy to go for the full hour on these. Look, that's disappointing, isn't it? That's really disappointing from Intel. There's probably a pairs trade here. You know, long NVIDIA, short Intel. There's your pairs trade. If anything, this looks really shaky. I mean, we should be in a demand zone right now. We should be seeing that demand manifesting itself as white candles and lower shadows. But if anything, we've got the opposite. We've got black candles and upper shadows. There should be demand here, but all we're seeing is supply. Now, I'm happy to give it the benefit of the doubt and say the demand might well come in, but until I have that evidence, I'm going to go, I can't see a reason to hold this. So this is not at hold. It's certainly not at buy. Buy is completely off the table, and therefore I'm left with sell, and it's still a sell for me. Maybe it'll bounce from here, I don't know. I can't see the future, but all the evidence to date suggests that you should not be owning Intel Corporation. Hey, you do what you got to do, but I could not be an owner of this share right now. And if I had it, I think the balance of probability suggests that I should sell it, or at least lighten the load. You know, if it breaks through, 2350, 2450, 24 there, at least you got some out. You know, if it bounces back up to 30, and I'm completely wrong on this one, and it goes to 30, 36, 38, 40, you won't be cursing my name so much because at least you held on to half. But for me, I think I'm out. We can see the power here of the long-term downtrend. It is just so powerful. Short-term trend is down, black candles, price action not great. They're really struggling to show evidence of demand at what should be a key demand zone. Here's my summary there. Well, I'm very curious now. Let's head over here and type in Intel. So in theory, you know, if fundamental analysis is worth anything, we should see an overwhelming consensus that this is expensive. Well, look at that. Isn't that interesting? This is the least liked company. In fact, I think we've seen today. It's worse even than Tesla. That surprises me a bit. Okay, highest target there, 45, lowest 17, huge spread. I mean, look at the standard deviation, $5. And 27.50 is the average, which allows a little bit of upside from here. But only 4 saying better than hold. 29 are at hold. That's just ambivalence, isn't it? And then we've actually got 10 sellers on this one. Look at the earnings line. EPS growing until, okay, well, there's your problem. 547 down to 184 and then 53. And then the bounce back is expected, but given that trajectory, you know, maybe you can't keep this at a low risk. Maybe you've got to go up to even a high risk on this. 11.8 is not demanding for an 88% EPS line, but clearly the brokers are not that confident it's going to get it. I mean, clearly they see substantial risks in that scenario. 11 is not unreasonable. I was going to say not unreasonable for, well, it's not unreasonable for 88%, but it actually doesn't look very reasonable here. I think it's almost too high, isn't it? 11 is too high given the historical. I mean, the norm is around 5. So if I go historical on this, it's starting to be overvalued, and maybe that's what the brokers are seeing. Even if I pair that back to low, if we go historical PEs, it's looking significantly overvalued, and maybe that's what the chart's reflecting. Okay, if we go historical PEs, if we go dynamic everything, so we go historical and future, it's coming out still expensive here. Okay, I think this is skewed to the upside. I think this is probably, out of all the combinations I've used, and the goal, and this is fundamental analysis, ladies and gentlemen. Fundamental analysis is pure guesswork. Technical analysis is black and white. It's just candlesticks, price action. This is saying, oh, okay, can I get this to a number that doesn't completely disagree with this and probably represents what's happening on the chart? You know, because who knows what this combination should be? And that's all the big brokers and research houses are doing. They've got a bleeding great big spreadsheet like this, and they're just mucking around with cells. They're just massaging these cells discount rates to come up with a number that reflects their opinion. I think that's a reasonable number to reflect my opinion. There's nothing here that tells me Intel looks cheap at this stage on the chart. The chart, I think, is reflecting that. Interesting. Okay, let us do the last one for today, which is Cadence Design from Phil, CDNS. Oh, amazing. Wonderful. I love it. This looks great. I'm glad we're finishing on this one. No complaints on here. I'm a buyer. I just need to figure out where. Last night's candle, not that inspiring. The other problem I see here, Phil, is just the $200 mark. It's just a big round number. And investors are a bit thick sometimes, Phil. Now, I know you're not in that camp. I know you're not one of those investors that only sell stuff because it gets to a big round number. You buy something at 50, sell it at 100, buy it at 100, sell it at 200, all right? But there are people out there that do think like that. Look, it needs to deal with it. I'm not saying you can't buy it because it's at 200. I'm just saying give it a little bit of time to deal with the 200. Clearly, there's a bit of supply in there because we have seen it. We've seen a little bit of 200 jitteriness come in, but it's not. There's not a lot. There's not a lot of jitteriness. In fact, I think it's fine. So that's up. That's all good. The price action is not terrible. Let me delete all studies here and try and visualize it better. I could draw them in through here. They're all very good through here. Through there, a little bit of an overlap through here. We had a little bit of uncertainty here. That's okay. Just brought us back to the light green zone, and then we saw the push through here. So that last trough so far is at or above the second from last peak. So clearly that old area of supply is now acting as an area of demand through there. That's what I'm talking about. So that's all hunky-dory. I think it's good. I wouldn't buy it tonight though. Just wait, just see if it can just put in this sort of price action again. And then just keep an eye out for the demand buddy candle. So you've got that one there. Let me undo that and make it black. Got that one there. Obviously, if you start to see these pop in, Phil, that's what I'm looking to buy. And let me make that white in the center. And then the other demand buddy candle, that's the one there. So if you see any of these occur in that zone, that's where I would not even think about it. I'd just go plus 1/3, and then once we can dispense with this 200 level, certainly going another plus 1/3 there without any hesitation, because as you saw when I zoomed out, it's all blue sky from here, and that's how I like them. And I do like this one. Let us head over here for one last time today and check out the valuation on Cadence. I wonder if we're going to get an Intel, or I wonder if we're going to get like was it Eli Lilly? Looked very good, didn't it? Okay, thank you, Thomson Reuters, giving me the data there. Only 14 estimates. That's interesting in itself. Not as widely covered as some of the other stocks we looked at today. 235 is the upper bound of the price targets. 190 is the lower. It's actually pretty narrow range there, which is good, isn't it? That's what we want to see. And the mean target there provides about 9% upside. Brokers pretty happy with this one. 9 buys, 4 strong buys, 3 holds, no sells, no strong sells. So, of all the brokers that looked at it, none of them saw anything that they just absolutely hated in this one. And that's encouraging for me. EPS line, we do see steady, consistent growth there, and it is expected to grow into the future. The compound annual growth rate, not as huge as some of the other ones, but a very respectable 11%. Would I pay 46 times for 11% earnings growth? Probably not. I think that's high. That's dynamic. So that's looking at the historical. Let's go to see what the brokers are saying now. Future median 34. It's still high. It still feels high for me. Okay, I don't think I'm up there with the 33.4, but happy to defer to the wisdom of the market. And that's what we're saying here with that. So I don't see any red flags here, is what I'm saying. I'm happy to go with the consensus. I'd be a little uncomfortable paying that much for that little growth. Where would I tap out? I'm probably more at a 20 for 11% growth, but there may be just quality at play here, and that's why the brokers are so prepared to pay more. But I don't want to fight the brokers on this one. So I'm happy to go here and say there are no red flags on Cadence. Okay, no red flags at all when it comes to live market analysis. Of course, only green is go flags and checkered flags, getting you to the finish line. And that finish line for me is giving you a better understanding of how to identify opportunity in the market, but more importantly, also how to identify risk in the market, how to manage that risk. And I do that for you in 3 sessions. If you're an ASX share investor, tune in on Tuesdays at 1 p.m. If you like trading indices, commodities, foreign exchange, and crypto, tune in on Thursdays at 1 p.m. And of course, you were just here in the USA edition Fridays at 12 p.m. That's how you register for any of the other edition the additions there, www.thinkmarkets.com/au/webinars. If you are not a client of ThinkMarkets, well, you should be. You can trade those Aussie shares with us, $8 flat rate trade, HIN and CHESS sponsored. But it's the US shares we're talking about today, and we offer those CFDs commission free. No commissions on your US stock CFDs. We've also got indices, commodities, futures, crypto, and shares. Of course, head to www.thinkmarkets.com/au to open an account. If you don't know who we are, as I said, one of the good guys in the broking scene, award-winning broker. We continue to win awards and be nominated for them because we have the best trading platforms and the best customer service. You can contact us, unlike many of our competitors who hide behind frequently asked questions. Don't you hate those? Yep, and chat bots. You can call us and speak to a real person and they will sort your problem out. I reckon that is worth a hell of a lot in this day and age. If you liked what you saw today, hit the subscribe button on the various channels you're watching me on and hit the like button. It's very important you do that to let me know you like what I'm doing, but also the management at ThinkMarkets. So, hey, they'll make sure I continue to do it. Apart from that, it's been a pleasure chatting with you today. All the best for your investing until we catch up again. But before you go, a quick reminder that everything we've discussed today is general in nature, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of this general advice, you should consider it very carefully or seek the help of a financial professional. We've got plenty more information about us and our products and services in our product disclosure statement, which you can download from our website.